Welcome to Thursday Night Stock Charts Live. We have a ton to go over. We're going to talk about the weekly charts. We're going to talk about some headlines that are positive for the market, some observations that I have using sentiment indicators, some charts that I like that imply that we will probably get in the very, very short term a counter trend rally in the market. Sentiment is horrible. You look on Twitter, my feed is mostly financial, and I can't find a positive comment out there. So as a contrarian, these are all indicators to me that you got to be buying. And what we've been doing these past couple of days, we've been buying. And I want to talk to you why, the whys behind that. So uh, let's begin with the news today out of the federal government, and that is the producer price index. Folks, this meme is powerful. The reason why it's so powerful is because it's so spot on accurate. It's scary. So this is the highest read in quite a while on the PPI. For those not familiar, the PPI is the producer price index. It's the cost of inflation at the producer level. And the producers either can absorb it, which they've done for years now. They've absorbed it rather than passing it on to the consumer. Now they're not doing that anymore. They're playing catch up. They want their money back. And you're seeing these rising prices reflected in the CPI data, which was released earlier in the week. So I'm trying to stay optimistic because this time last week, I came on, I was very passionate as a matter of fact, let me share last week's video. Watch it at your leisure. And I had mentioned the most important word that anyone should have, and this is as of last Thursday, was that the key word, everything works around this word. If you want to survive in this market, that word is liquidity. You must have your capital reserves. You can't piss in the tall straw with the big dogs without your capital reserves. So the value of preserving your capital by not allowing it to get chewed up by the market is that you could take advantage of situations that develop. We did some buying today, or we did some buying yesterday. What are we buying? We're buying gold stocks, we're buying silver stocks. We bought, hell, Tupperware. I plan on buying perhaps IDEX Pharmaceuticals, Intercontinental Exchange, because they're all beaten to death. Do I think they're going to all-time highs anytime soon? No. But I think we're going to get a rip-your-face-off counter-trend rally in short order. We have held on to our Netflix trade. That was up today despite the weakness in the overall market. Even when the market was down at the depths of the session, Netflix was up. So what we're doing is we're looking for names that are showing relative strength. What else showed relative strength this week? I caught some heat on this on Twitter because I said ARK is probably near a bottom, probably about $33 a share. And what was up today? ARK. What else was up today? What got killed yesterday? That was Coinbase. So you're seeing buying. You're seeing buyers step in. Are they right longer term? I doubt it. I think we're going to longer term go lower, but in the short term, I don't know about tomorrow. I don't even know about Monday. Monday, I'm frankly worried about. I'm always worried about Mondays. But Tuesday, turnaround Tuesday, I could see that happening. We're going to go over the weekly charts in a moment. We're going to go over the daily charts in a moment. We're going to use TrendSpider to point out support and resistance levels. TrendSpider is our sponsor. Link below, 7-day free trial offer. I give it away free. I believe in it so much. That's my pitch. I'll be doing a demonstration in the moment. Let's move on. So, what else is going on in this market that is making me kind of optimistic about the market bottoming short term anyway? The labor market's cracking. You're seeing layoffs. You're seeing the weekly jobless numbers rise. Now, why is that good news? What sick mentality do I have that would make anyone believe that that is good news? The reason why it's good news is that the way Wall Street perceives bad data is that it's through the lens of how the Federal Reserve sees the data, meaning it's going to be very, very difficult with unemployment rates rising to continue down the path of rate hikes. Add to that, you have a CPI report as well as the PPI report. The PPI, I believe, dropped down versus April. Yeah, it was a lower expectation, so rose milder than in April. So the rate of change on inflation on PPI is slowing. On CPI, it's dropping. So that's good news. And really, it was the CPI data, the consumer price index, that got me thinking, okay, we should rally here. And we did initially. However, they sold it off hard. So I believe that with the PPI data, I believe that with the CPI data, I believe that with the labor market data, that we're a lot closer to the end of the Fed rate hiking cycle than we are to the beginning. Now, many of you may be saying, I don't think this guy knows what he's talking about. Back in February, I was interviewed. I did a presentation on TrendSpider TV. I mentioned back then that short term I was bearish on Bitcoin, and they were a bit taken aback by that. And since that point in time, Bitcoin has totally tanked. And I said my favorite short for a trade on Bitcoin going down below 30,000 is MSTR. Here's MSTR. This is back in February, early February. Here we are now. So I try to read the contrarian tea leaves, for better, for worse. If there's good data, I want to talk about it. If there's bad data, I want to talk about it. I've been talking about bad data for a long while now, and it's come to fruition. Now it's time to start looking at the markets through a different lens than what we have in recent past. And we really got to ignore a lot of the negativity that's on Twitter, because everybody was expecting a down day on the Nasdaq comp today. Well, the Q's closed up. Well, the comp closed up, not the Q's, sorry. I'm closed up on the day. So this is not quite a bullish key reversal bar, meaning we didn't trade down and reverse to close at or near the highs of the day, but close. We need some consolidation here. Ideally, we get one last washout, then a bullish key reversal bar. That sets the stage for a rally here. Let's continue on with what's going to probably drive this market down lower, the longer term. We have a president that is dismantling this country, turning off food supplies, turning off energy supplies. The Biden administration cancels huge Alaska oil gas lease as gas prices hit record high. This guy's not American. He's not for America. And when you have this guy at the helm poking the Russian bear with a $40 billion arms package, and you know what? I'm not even just going to say him. Folks, if you're living in a blue state where your vote matters, or is it a red state? Why are the Democratic states blue? They should be red, like communists. But be that as it may, you had a vast number of Republican House members last night vote for $40 billion worth of aid over to the Ukraine, yet we have no baby formula on our shelves. We have our borders are being overwhelmed, yet there's no money for us. We have sent more money in the past 6 months over to the Ukraine than we spent on a federal level on bridges and roads in the entirety of last year. So bond yields are pulling in because what the market is sniffing out is that we're heading into a recession. You have demand destruction caused by the Federal Reserve. We have a potato for a president, and even the markets are expecting that inflation is going to come in. This is an what do you call it? Illustration of the swap market, and here is current in white, our current CPI. Now, here's the forward-looking curve in dotted blue. So what this is telling you, this is not the Federal Reserve coming out and saying, we got it under control. They don't. This is not the federal government coming out, executive or congressional leaders coming out saying that we have it under control. No, these are people putting money where their mouths are. And they're betting with their money, and they're betting that the CPI is going to come in some. It's never going to come back to where it was, but it will cease to move up at this trajectory. The one thing that's going to hamper the movement of yields lower is this dude right here. And forget about the Democrats in Congress, folks. If you have a Republican representative, find out how they voted on that aid package last night. Call them. Let them know you are not happy, and we see you. This is going to now go to the Senate. Pay attention to how the Republicans, forget about the Democrats, the Republicans, how they vote. If you're in a state where you could primary these people out of office, you got to get rid of them. You got to go to the voting polls and get rid of them. It doesn't matter if we take the House in 2022. It doesn't matter because you're still going to have the swamp in charge. You got to primary these rhinos out. I beg of you. All right, let's talk about other good things here in the market. You have the Bull Bear Sentiment Index. We're at levels, folks, that are below, or were below. We've come back a little bit. Below the 2020 crash, below the 2010 swoon, below the 2008 swoon, a lot of bearish sentiment. As a contrarian, I look at this and I say, okay, this is good. This is good stuff. Now we need to start shopping. We need to take that liquidity that we kept on the sidelines. We now need to put it to work. We have to step into the breach, buy when there's blood in the street, and then sell the rally. Get out quick. What might force the market up higher? These types of headlines will do it. Robinhood spikes 25% after crypto billionaire FTX owner buys stake. People are stepping up to the plate now, putting their money to work, taking advantage of opportunities. The Federal Reserve, what are they doing this week? What did they do? Did they roll debt off their balance sheet? No. Their balance sheet grew. This is as of yesterday, this past week. So they're in there buying treasuries. They have not begun to roll off debt off their balance sheet. But folks, this very same chart, which I'm opining about right now as being bullish for equities, supportive of equities, in June, if the Federal Reserve keeps their word, begins going the other direction. It goes lower. And if you look at this chart over the past 5 years, you'll see that this chart of the Fed's balance sheet trades tick for tick with the stock market, the S&P 500. So if this is what brought us to the party, who's going to take us home? Right? It's not going to be a smooth journey home. So while I think that we have a short-term rally brewing here, Longer term, if the Federal Reserve lives up to its word, we have a lot more blood in the streets to go. Fast forwarding on that inflation topic again, when you take a look at the Prings inflation index, this is a weekly chart. Believe it or not, you won't know it by listening to the talking heads, or you won't hear it by watching Twitter. I'm telling you, I was just on there. I can't find a happy voice. We peaked out the week of April the 11th on the Prings inflation index, and we are now gapping down week over week. So this is a good sign, right? Demand destruction is here. The only problem is it's going to force us into a recession. Now, moving on to psychological indicators. The put-call ratio. It's elevated, but ideally we get one last surge up to 1.15 on the put-call ratio. And that would be a signal that we have a top. Now, we have a lower high here. If we break the new lower lows, okay, I'm good. That's the top, and we should expect a rally in equities. But ideally, just like with the VIX, I'm looking for that one last burst up higher, and then a bearish reversal bar on the VIX, a reversal on the put-call ratio, and a bullish reversal on equities. Here's the bulls versus bears index. So you could see that in red are your bulls. They are far more pessimistic than what they were. But usually this crossover implies that you're at a low, at least a short-term low, and that you're due for a rally. So this is a sentiment indicator, just like this bull-bear indicator. So this is bullish for equities. High-low ratio. I won't go into details. I'll keep it simple. Any read down below 0.1 is a sign you're at a bottom. Doesn't necessarily mean we're going to pop up tomorrow, but we're close. We're very, very close to a short-term bottom. Now, longer term, this is the Shiller PE ratio. Equities are still extremely overvalued. They have a lot further to fall longer term. But you have shorts that have a lot of profits. They need to make those profits real or risk losing them, some of them. And to do that, they need to buy equities. And that'll force a stampede of equity buying, a short covering rally. It could last a week. It could last 2 days. It could last several weeks. I don't know. But bear market rallies are by far the most vicious rallies that you could possibly see. Shorts can't get out of their way quick enough. So expect it. It's coming. Now, names that we're watching, names like we're long of Netflix. Take note of Netflix. Higher lows on RSI. Now we're breaking out to new higher highs. Nice cup, handle formation. We have a bit of resistance at 175 per share. I think we need to pop up higher to burst through 175, ideally a pop up higher and a close above 180. A close above 180, that takes us up to 200 in a short covering rally. For all I know, Netflix is going to roll back over, make new lower lows longer term. I don't know. I'm not an investor here. I'm a trader. Simple as that. Other names that we like, and I didn't come up with this name. It was brought up by one of our members today. I can't take credit for it. Tupperware, absolutely hammered on earnings. Big downgrade. Citi just put a $13 price target. It was 27 price target, downgraded to 13. Why do I like this abysmal chart? Simple. RSI is at 10. We have support Where are my trend lines? Ugh. There we go. We have support immediately below, as noted by this dashed line here. So what we began doing today was began nibbling. We have to assume that a weak stock is going to tend to get weaker. We're going to look for that bullish key reversal day. There's a lot of shorts in this name. They're going to have to book profits to make profits. So once we see a bullish key reversal bar on Tupperware, meaning it trades down, reverses to close up on volume, we'll be aggressive buyers of Tupperware. Sorry about that. What else do we have? IDEX Pharmaceuticals. Monthly chart. This is the value of the automated trend lines. Folks, if you don't have TrendSpider during this sell-off, you're nuts. You're going to have to go through a lot of charts quickly, and you need to have automated trend lines at the ready for you. Click of a button. There you go. I didn't draw this line. The algorithm did. 35% discount code below. So we are at current, still down below support, but on a daily time frame, we showed relative strength today. This is a bullish engulfing bar. We had RSI down below 20. We are now hooking up. It showed relative strength in the face of a weak market, just like Netflix. These are the names that we are looking at. Shares that are showing relative strength or are at, they're just being sold off, like silver. We bought AGQ today. AGQ, the silver ETF. We added to it. We already owned it. Hammered. Right near the lows of 2019. We're flirting with a breakdown here. I think that we're going to bounce back. Why? I think the dollar is overvalued. A lot of money making its way right now into money market funds. Why? They're selling stocks. They're going into money market funds. Therefore, there's a demand for U.S. dollars. But once you start seeing money come out of U.S. dollars, out of those money market accounts, back into equities, back into bonds, because remember, bonds have been weak, and not for the past couple of days, but overall, the bond market's in a bear market as well as stocks. So at some point in time, that money's going to come out of the U.S. dollar and go into other assets. And what's going to happen to silver, gold on this nasty, brutal sell-off? They're going to have a V-shaped recovery. I'm going to show you a chart in a moment. Do I have it up here? Thought I had it up here. Here. Jeff Clark posted this. Got to give him credit. So this is silver and gold. Silver to the left, gold to the right, back in 2008, right? We all know what happened in 2008, right? We had a bloodbath, right? The great financial crisis. So equities we know were down, but what did silver do over the next 2.5 years? It rallied 448%, folks. Gold in 2020, what did it do? It rallied 146%. They all went down with equities, but they recovered quicker. That's why we were buying silver today. That's why we were buying gold stocks yesterday. That's why we plan on buying more gold stocks as soon as tomorrow, because they're at historical support levels. They've been taken to the woodshed, beaten like a baby seal, and it's time to be buyers of them. Let's go to comments. Trader Isaac, hello Bob. Will 1131 hold at support on wheat? We'll go over it in a short while. Trader Isaac. Okay, we'll take a look at it for you. Pete, Fed Chair Powell executing soft landing. Maybe I saw that on Zero Hedge as well. Ukrainian, hey. Louis. Hey, brother. The lovely cat. Hello. Oh, thank you very much. Rush home to see me. Thank you. I may have to exit my Pfizer trade. I was looking at that. Carter Worth was bullish on it, along with that big nose dude, Dan Nathan, who I don't like. But I like Carter Worth. I think maybe he was just being nice to Dan Nathan. Pfizer, I don't like. Oh, I didn't look at today's chart. It broke out. All right. How was volume? All right. I want to see Pfizer go down. I don't know, Kat. There's a lot of sellers above here. But you got to do what you got to do. So I can't let emotions get involved here because I can't stand this company. But that being said, it does look good. Where's my chart of Pfizer? I'm boring everybody to tears right now. Let's update this. As a matter of fact, yeah, let's do it. You closed out the day right at weekly resistance. If you got to stop out, you got to stop out. But man, if we break 47 on Pfizer, it's going down. It's going down really, really hard. All right, let's go to the weekly charts. All right, so I talk a lot about the yield curve, and I know a lot of people out there, you don't want to talk about bonds, but yet you need to watch the bond market. You got to watch the bond market. Oh, hold on, going back to Cat. It's a contrarian trade, which you may like. It will not break the 200 single SMA, and the weekly is at support. Well, yeah, your weekly on Pfizer is at resistance now as well. So really, right now, it's between a rock and a hard place. Technically, you have the edge right now because it's got to break out. If it doesn't break out, if it sells off the highs of the week, me personally, if it sells off the highs of the week, I'd stick with the trade. On a breakdown below 47, I would lean into it. I wouldn't lean into it now, but I would lean into the trade harder on a breakdown below 47. So if you could stick it out one day, see if it closes above that resistance mark, that's what I would do because you're right at resistance. It's really a show me stock. Bob Biden said it's not his fault about anything that's going on here. It's that pesky pandemic and Putin's fault. God, yeah, yeah. Accountability is really lacking in Washington. Talon, brother, hello. Biden lets you do is it? Yep, World Economic Forum, our new leaders. By 2030, you'll own nothing and be happy. Vote for all the ultra MAGA candidates, ultra MAGA. And that was made up by the Democrats to make us feel bad. Cat. Trudeau and Ukraine going to U2 concerts. What does that tell you? Yeah, right. Right on Trader Isaac. Yes, sir. Yeah, 2,000 Mules. I got to watch that. I haven't watched it yet, but I'm going to probably do it tomorrow night. Get some popcorn. What do you think of Beijing lockdown rumor? I haven't heard the rumor. I know they're locked down. Has that changed? I know Yang this morning before the market opened looked like it had a bullish reversal bar on the day or on the week. I forget what chart I was looking at. Zero COVID is not possible with the PCR test. Yeah, exactly. Yeah, there's something else really, really nefarious going on over in China, and they're going to want to duplicate that here. I really think their economy has already crashed. I don't think their economy was ever as big as they ever made it up to be. Too much, corruption there. I mean, we have it here now, unfortunately. Eric, happy Thursday. Sure, NVIDIA. Love to look at NVIDIA, one of my faves. Still very expensive, though. But semis, I'm going to go to the chart of the semis in a moment. Semis have hit weekly support or very close to it. Do you think RIVN is a bottom? I'll be honest with you, until I heard that companies were taking markdowns on their balance sheets, I had never even heard of the company. Your AGQ trade goes against silver seasonality, Bob, but gold may begin to move up soon. I lean towards Nugget. Yeah, Nugget on seasonal basis, these 2 months aren't the best for it, but in July it ramps up. I'm reluctant to talk about seasonality when you had such a drawdown like we have in the market right now. So I get your point, but I'm going to give it a pass this time. We're at historical support levels, so if we break, I'll have to stop out of the position I put on today. Simple as that. I don't like the monthly charts. We really do need to see a rally back on silver, and for that matter, gold. If they don't rally back, there's something else wrong out there. MRK and Pfizer. Yep. Evening, Bob, and everyone here. Good evening, Franklin. Sorry, Bob. I'm on a rant. That's okay, Cat. That's okay. You are our one of our few females, possibly out of the folks that are on here, the only one. Our demographic proves that on our statistics. So you're welcome. You can rant as much as you want. Okay, let's get to it. Yield curve. All right. So again, folks, people aren't looking at the bright side of things. All right. That's my job, is to tell you when things aren't looking so good, when everybody else is bullish, and when everybody's bearish. I'm here to tell you, hey, it's not as bad as you think. And this could change. It could change tomorrow. But as it stands right now in this snapshot in time, the yield curve has stopped steepening. That is bullish. If we see us recapture the highs of the month and move up higher, that is bearish. Simple as that. Overlaid here in blue is the S&P 500. It's clear, defined. As the yield curve steepens, equities go the opposite direction 100% of the times. So it stands to reason that if the yield curve is coming off now, we might catch a bid in this market. I'm not going to say that this is a long-term solution to our situation. In fact, I think that at some point in time in the near future, we're going to get a rising yield curve. It's not happening right now. This is the reality that we live in. Let's appreciate it, acknowledge it, put it to work. And if you see an opportunity out there, keep this in the back of your mind. The yield curve has stopped steepening, bullish. Bond yields. Folks, this is the bond market telling you we're going into a recession. Yields are coming in. Bullish, bullish for growth. Not good for your industrials, not good for many cyclicals, because if we go into recession, there's not much need for home builders. There's not much need for contractors, things like that. Truckers, the Port of Virginia has seen like the lightest month in years, so you don't need as many dock workers. So as yields come in, though, it's good for growth stocks, especially those companies that are hanging on for dear life, who have current very cheap debt and need to roll it over, because if they don't roll it over, they're going out of business. So they need cheap money. Yields are pulling in. Bullish for growth stocks, caveat, growth stocks, and gold mining stocks, silver, gold, TLT, 20-year bond, 20-year bond ETF. I was thinking tips. Bullish reversal bar, money flowing into the bond market, bringing yields down. Let's go to a daily chart here. We broke out. We're going to have to pull back and retest this breakout point. We'll see if it holds. This could just be a dead cat bounce in a bear market. It could be a bear market rally. So I'm not going to say that this is the bottom for bonds. This is what I'm looking for in equities. And when we rally up and into the 20-period moving average, I'm going to come on here. I'm going to say, I don't know if this is a bottom. I don't know if today was a bottom, tomorrow's going to be a bottom. I have no idea. Anybody out who says they do, they're a liar. They're hoping to get lucky. So what we need to see to say that, okay, the rally or the sell-off in bonds is over, we need to look at a weekly chart and a monthly chart, not a daily chart. And we need to have had a sustained rally for a couple of months or a couple of weeks, and then a pullback, and either a retest of the lows or a higher low. And then we need to break out to new higher highs. Once we break out to new higher highs, it's game on. That's your new bull run. We're nowhere near that yet. This is simply a dead cat bounce in a bear market on bonds. So please, if I'm talking optimistically about anything right now, equities in particular, it's short term. The tip market. So bond yields are coming in. Inflation's still on the rise. People are moving back into tips. We're off the lows of the week. We're also off the highs of the week. Look at your Stokes. They're flatlined. You're going to get a massive counter trend rally here off of support. Daily view. Again, massive counter trend rally. We had a reversal off of resistance today. You need to see a pullback and a higher low or a retest of lows. If we don't, it's just a continuation breakdown. If we break down below 117, don't fall in love with anything you buy. It's fleeting. The US dollar. All right, so I think that we are probably going to see higher highs here, but the dollar is extremely overbought. On a weekly time frame, we have RSI at 80.84. We are now in the wick of this blow off top of March of 2020. Remember what was going on in March of 2020. Equities were in free fall. Where was money going? It was going into money market accounts. People were afraid. They went to cash. They went to dollars. So that's what's going on here now, along with the fact that you have this Ukrainian situation, which is still a problem. But I don't think it's as impactful on the dollar as it once was. It's impacting the euro negatively, therefore helping the US dollar positively. But that benefit is going to begin to wane, especially if the Russians claim victory after engulfing the forces in the southern portion of Ukraine. They're engulfing them, and they may just claim victory and go home after seizing those territories. If that happens, you're going to see the euro rip. You're going to see the dollar collapse. So keep in mind where we're at. We are in the wick where we saw a lot of sellers move in back in 2020, aka resistance. So we could move higher here, but this is not going to end well for the US dollar. This goes back to why we're doing what we're doing, despite seasonality, and Larry brought it up accurately. Seasonality may not be our friend right now, but we're taking an observation. We know that the US dollar trades inversely of silver and gold by and large. If the US dollar pulls back off of this, what appears to be setting up as a potential blow off top, well, then those names are going to rip up higher, silver and gold. So that's the play here right now. That's the shot. Volume is still very, very high. No doubt about it. Possible double top on ADX green. We have new weekly higher highs here, yet no validation on ADX that we have put in a new higher high. Daily view. Huge gap up higher. And I'll be honest with you, I was calling for a top back here because I saw topping action. What you may get here short term is a filling of this gap. If this is a blow off top, dollar traders are going to ignore the gap and they're just going to take it up higher. And then they'll fill it at some point in time in the future. So the dollar, I looked at the intraday chart earlier, was pretty bullish into the close. So I'm thinking that we may get a new higher high tomorrow. Yeah. Yeah. We broke out into the close. So for gold and silver lovers out there, you really want to back up the truck once you see the dollar begin to sell off hard. It's going to be a brutal sell off. The VIX. All right. So I'm torn on this one. The VIX has not been confirming the weakness in equities. It simply hasn't. We should have had VIX this week at least tapping 40. It didn't even close above resistance. But what I haven't said so far during this commentary is that we have one trading day left to go. And when I go over these charts again on Saturday with members, sure enough, there's always one or two charts that have changed dramatically on Friday from how they looked on a weekly time frame on Thursday. So while right now we don't have a breakout, and in fact, right now we have given up the breakout that we had seen 2 weeks ago. Actually, we gave it up last week, but we are almost unchanged on the week relative to equities. And you take a look at the daily chart, you know, S&P, the S&P 500 on the week is down 4.62%. On the day, it was down, and the VIX is supposed to trade inversely, but it didn't. It closed down significantly today. So is this topping action on the VIX? It could be. It could be. So this is another observation that I'm bringing to your attention that may imply, the operative word, may imply that we are near a short-term bottom in this market and that we should be expecting a counter-trend rally in equities. The Dow Transports. So the Dow Transports at current, one trading day left to go, a weekly time frame, is down below the neckline of this head and shoulders top. Here's your double top. Here's your left shoulder. Here's your head and your right shoulder. If we close down below this blue line here at around, let's call it 14,500, round it, it's probably all over for the Dow Transports. And with a recession on the horizon, I think that the transports could quite possibly break next week. These are your cyclical names. They're expecting recession. The Dow Jones down 3.5%. Where might we have support? Ultimately, 30,500, but ideally 29.5. But you do have some support right where we closed or bounced today. And that was last seen back here in, let me upload this. Last seen back in March of 2021. Daily chart. Now today, we bounced, and we bounced significantly. We still closed down on the session, so odds still favor bears, no doubt about it. I wouldn't be the least bit surprised for us tomorrow morning to wake up, see red futures. What are they doing now? I'm just curious about the futures due to that Robinhood news. S&Ps are down. Where are my Nasdaqs? Russell down a third. Where are the Nasdaqs? Nasdaq futures are flat. So they're not catching a bid here on that Robinhood news. You know, it's news like that that tends to stoke bullishness in the market. We're not getting it. There's no follow through here. So I suspect we're still going to have a lot more chop in this market for the next couple of trading days, but still at a tradable bottom short term. I'm going to keep saying that. I don't want to get quoted one day saying I called the bottom and we're down significantly lower, but after a rally. S&P 500, we kind of already spoke about this. We bounced today. How was volume? Volume is still high, but volume is trending down. Look at the higher lows and ultimate oscillator. MACD very mature. Let's go back to the weekly chart. So here's your declining lower band of support, and we came very close to it today. So we do have more downside here. Ideally, we tap 3,800 on the S&P 500. That would be ideal. I think there's a lot of buyers down there. The trip cues, they did in fact tap what was resistance is now support. We bounced today. Massive volume on a weekly time frame, daily view. A bit of buying today, but volume still significant. Let's see how we closed out the session and how we may open up tomorrow. Yeah, so I think you just saw some shorts covering at the end of the day. We were stopped right at the declining 20-period moving average. We have resistance immediately above. Now, if they gap it up by chance tomorrow, wait for a filling of the gap. Do not chase any morning rallies. You're going to get fillings of gaps here. It's the last thing you want to do is chase any rallies. Note we're beginning to put in higher lows intraday. The banks, horrific week, down over 4.75%. Stokes very oversold. We bounced this week off of support last seen back March of 21. So it looks as though those March support levels are support yet again, daily view. Ooh, doji star formation, a sign of indecision on the banks. Volume is still rising sequentially, but I do believe that we're going to get a rally here fairly soon. Let's check out FAS, which is a leveraged ETF. Similar. Volume declining to the downside. That's good stuff. Technology. I still hate technology right now, but we did bounce this week off of support last seen back in May of 21. Daily view. Now note, I've been using these a lot tonight. The lower band of declining support. We reversed the close back above it today. That's bullish. If history is any indicator, we should get a rally up to this upper band of resistance in the next couple of trading days. But again, that does not mean that we've seen a bottom in the overall bear market. It's just a short covering rally. Simple as that. Semis, weekly view. We're at a tradable bottom here on a weekly time frame. We're at support last seen back in March of 21. It is an ugly week. Volume is heavy. Let's see what the daily chart is telling us. Weak. It would have been great if we had reversed off the lows of the day to close back above this support level at around 2250. It didn't happen. So therefore, what we need to conclude is that what was support here on May the 10th is now resistance. So we probably need to pull back a little bit further here before we get a rally. LABU, biotechs, extremely oversold. Nice bounce today. Massive volume. This is capitulation volume. Daily view. Double bottom setup on your Stokes. Nice reversal bar on the day. I would like to have seen it close closer to the highs. I'll take this. I think that 5 now becomes a psychological support level. Awesome volume today. Double top on ADX red. Nice. We'll take it. Energy. An inside bar. No new high, no new low. And I'm surprised at this. Or maybe I'm not so surprised. Bullish key reversal bar. Because remember, Biden canceled out those leases in, I believe, the Gulf of Mexico and Alaska. Volume was strong. So good day for energy. Staples hit hard on the week, but not as hard as the overall market. Volume strong. Distribution. Daily view. Nice rally off the lows. All down days are not made alike. This is a good one. We were down below support. We managed to close back above it. Would have been nicer if we would have closed positive on the day. Didn't happen, but you know what? We'll take this. This is a tradable bottom. If we retest tomorrow and we close above the support level, we're using the 3-day rule. 3 days above a support level, you could start looking to open a position. Know where you're going to put your stops before you enter the position. Consumer discretionaries, horrific week, but I'm willing to bet, and I've been very bearish on the sector, that we close above the support level tomorrow. Now resistance, possibly support tomorrow. Daily view. Very oversold. We bounced today, couldn't close at the highs. We need more blood in the streets, and then a reversal bar. Bitcoin. It's holding support. Michael Saylor, CEO of MicroStrategy, I would not want to be in his shoes. Emerging markets, avoid right now. Very close to a buy signal. We bounced off the lows of 2020. Very close to a buy signal. You can't buy emerging markets until the dollar breaks. The dollar is a tax on emerging markets, meaning a strong U.S. dollar is a tax on emerging markets. Avoid, but this is going to be an awesome trade when the dollar breaks. We will be buyers of emerging markets. Daily view. Not much happening here. Wait for the dollar to break. Gold. All right, so I mentioned earlier that while we stepped up to the plate to buy gold stocks, I'm not going to forget about the monthly chart of gold. These past couple of weeks, I've been very bearish on gold, and rightly so. It's followed through to the downside, and I'm a big bull on gold. The however is that when you start breaking support levels, I'm not a occultist about gold. It should be going up. It's the right thing to do in a stagflationary environment. But what concerns me is that it's going down. So I got to read the tea leaves here. So this is a monthly chart. We really need to rally back by the end of the month and close above 1850 per share. Excuse me. 1850 the ounce. Daily view. And it was a horrible day today. It was a great day yesterday. Horrible day. 1860s resistance. We really need a strong rally back here. And I don't think it's going to happen until the dollar breaks hard. Let's go to some chart requests and we will call it a night. All right. Wheat. Trader Isaac. Let's go to comments first. Seymour Rivers. Hoping dollar pulls back. You and me both, brother. Talon. Yeah, I want to go over both of those charts. I like them both. Airbnb. AMD. Enic Crunch. Oh, you're welcome, Kat. Back in nibbling at a few cryptos, baby steps. There you go. And Crunch. Bob, you bring clarity to this calamitous market. Much thanks. Hey, thank you very much for that. I appreciate it. That's the goal. And thank you for being here. Really. Thank you, everyone. If you could smash that like button, it really helps me out. Thank you very much. Okay. Let's wheat. Yeah, you got to struggle here. This is the look at the volume shelf on wheat. This is a monthly chart. We're going to do a top-down view as we always do. 1161. I think I may have said 1131 on Twitter to you yesterday, Trader Isaac. Or was that today? I got my days confused. But 1161 appears to be the resistance level to watch. RSI, very strong. This is a very strong RSI. You're at 84.62. Very overbought. Strong week, showing relative strength. Very nice breakout here. It looks like it wants to go higher. RSI hooking up, validating price. No monthly resistance levels to concern ourselves with. But we do have a volume shelf immediately above here. 1161, that's the price to watch. Good volume today. 2 back-to-back strong days. It still looks good. It still looks like it wants to move up higher. Bullish. Intercontinental Exchange, we're looking to buy. Why? Nobody wants it. I put this out on Twitter, I believe, yesterday. Where is it? That was my call on ARC. I put a call out on Intercontinental Exchange. That may have been on Stock Twits. Yeah. So here was my call last night. Intercontinental Exchange due for extreme oversold bounce off of a daily and monthly support with RSI sub 20. What did it do today? This is the chart I posted yesterday. It bounced. It held support. Now, this is the monthly overlay of resistance on top of a daily chart. I don't know how many charting softwares are out there to do this, but TrendSpider, 35% discount code below. Would you know if you were looking at a daily chart that you had monthly resistance immediately above? Probably not. So what this tells me here is I got to create an alert. letting me know when we break through so that I could buy Intercontinental Exchange. Take note of how RSI now, here's my alert, it's set. RSI now is hooking up. It's hooking up. So we're bullish on Intercontinental Exchange and quite possibly buyers as soon as tomorrow. Let's take a look at NVIDIA first. Trying to go in order so I don't miss anybody. Doji star formation on NVIDIA, daily chart. Semiconductor sector is at weekly support. I'm liking NVIDIA here. I think that we are at a tradable bottom. Doji star formation on the day. Even though we had a Doji star formation on the day, what do we do? Higher low on RSI. We have monthly support immediately below here. So if we get in this neighborhood, if they do in fact push this market down lower tomorrow, you can bet your bottom dollar that I'll be in on the video buying it off of monthly support hand over fist. Because what have we learned so far tonight? What have we done? We've done our homework, right? We know the psychological indicators are in place for a counter trend rally. Check that box. We also know that we are at historical support levels, whether you go back to 2021 or 20, we are at historical support levels good enough for a tradable bottom. Trip Qs at the lower band of the declining downtrend channel. So we're getting ready for a pop here, and NVIDIA is textbook what you want to buy. It's best of breed. I hope they knock this down one last time. One last time. Touch, bounce. But I'm not going to be the least bit surprised to see a pop if they gap the futures up tomorrow. We'll be watching RSI for a breakout. I accidentally did not go to the monthly chart first. Very rare that I do that. So we have some support here. Right where we closed today, 161.15 was support back in June of 2021. We're doing our homework. We're not buying stocks willy-nilly. We're watching where there was historical support. We're buying them there. This one is looking pretty good as a long trade. Weekly support. We closed right at weekly support. Good stuff. One trading day left to go. So NVIDIA, bullish for short-term pop. Also long Ross, also long Netflix via 165s, 8 days out. You're doing the front week. Oh well, you're doing next week. You're playing the weeklies. I bought the Julys. I went out at the time. I think it was 69 days, 65 days, something like that. Because that 45-day mark, you get that time decay that really starts to kick in, that theta decay. So I wanted to avoid that when I'm long options, but we are also long using options on NVIDIA. We also have a Strangle trade on, hedging that trade. As a matter of fact, I put on a debit spread, meaning I sold a deep out of the money 215 call option on Netflix while simultaneously buying a 160 deep in the money call option. But it went against us. But when I saw the shares begin to pick up steam yesterday, I booked profits on that call side hedge, took that hedge off. Now I'm naked the calls, net long of Netflix. Took profits this AM at 15. Congratulations. Okay, let's wrap this up. RIVN. Weekly, I don't even know. I have looked at the stock before because this is my handwriting over here. There's not a lot of data here. It's very difficult to analyze this. We filled a gap. I don't like this stock at all. If it breaks the support level at around 21.80 per share, it's probably going to take out recent lows. RSI was oversold, hooking up. If it breaks out above 26.50, then it would be interesting. But right now, I would avoid this. It's too much headline risk here. And the technicals aren't wonderful. You don't have a lot of data to work with. I would avoid it. Too many other good stocks out there. Airbnb being one of them. Netflix, another one. Netflix monthly chart first. We may not have all that much data. We don't. I think that Netflix, if we close out the month above 119.33, that would be a very positive thing. Weekly view. We are down below at current. Again, the value of the automated trend lines, folks. So I drew this line in dash line. The system is picking up in solid line. Now resistance above. We need to close out the week above 116. Now there's a problem. The problem is that the market is telling you that there's a lot of resistance above. So either we need to take another pullback to another support level and then take another running start at these resistance levels, or we need to gap up tomorrow. We need heavy volume, a gap up. We need to pull back, retest what is currently resistance, then needs to act as support. So on that gap up, if it does happen, I would not chase that rally, because sure as God made green little apples, they're gonna send it back to retest these support levels. So I wouldn't buy Airbnb right now. You're right at resistance. AMD. AMD is up on the month. Monster. But clearly you have resistance at that $100 per share mark. Weekly view. We took out the lows of last week. No follow through to the downside. That's just a good signal. But volume is still running heavy this week. So on a monthly and weekly time frame, I'm not seeing a buy signal. Daily view looks a little bit more appetizing. You have a higher low. Here. This is another feature, candlestick patterns identification. I didn't even know I had this on here. Good stuff. So we now need to hold this support level. If AMD breaks today's lows, it's coming down here to 78.50 a share. So I like it here. I would be okay with buying some here, but I wouldn't buy more until we broke out above this upper band of resistance. And frankly, if we manage to rally up and into this upper band of resistance in red, I'd be a seller. I'd book my profits, then take a step back and say, okay, does this stock have the rocket fuel to blow through this resistance level, or is this a bear market rally subject to fail and we're going to roll over to new lower lows? Something to ponder. Talon, thanks, Bob. Joining the team was a great decision. Well, it's great to have you, Talon. You participate a lot. Thank you for being here. Franklin, thanks, Bob, especially during these times. My pleasure. My pleasure. Yeah, and on that note, folks, Again, I have to reinforce, and I posted the link earlier in the feed. Liquidity is king. It allows you to do things when other people are panicking and freaking out. You're able to think with clarity. You're able to take advantage of opportunities you rarely get. So keep that liquidity on the sidelines. Avoid getting into the fray. I'm not saying that I haven't gotten beaten up a little bit here. I have. Netflix knocked the crap out of me on that earnings trade. My gold mining stocks, thank God, I booked some profits a couple of weeks ago because they just fell out of bed. So I knew from trading prior bubbles, liquidity is the key to surviving these market environments. So if you have liquidity, you're going to live to trade another day. With that, folks, thanks for being here. Have a profitable trading day tomorrow. Smash that like button. If you want to join, 14-day free trial offer below. To my service, TrendSpider, 7-day free trial offer, 35% discount code. Support the channel. Hit that like button, subscribe. Be well. Have a great night.